challenge isn't in the strategy, but in the application of the strategy. Welcome to Lesson Lambda. Now, before we move on, I think it's important to come back to this slide, and obviously I shared this slide with you in the introduction, but this is the course overview. And what I want to do with this is just, for one, show you your progression in this course. We started with the trading fundamentals, we moved on to the trading principles, and we've now arrived at the trading strategy section of the course. In other words, part 3. Now, the reason I want to bring this back at this point in time is to just show you, for one, how far you have come, but then more importantly, allow you to recognize where you are going. In other words, with the trading strategies, what we've started with in lesson 10 is this idea of the playbook templates. And I introduced these templates to you that you're going to be utilizing throughout the strategies developed in lessons 12 to 16. But more importantly is to give you an idea that once we have developed the 5 trade strategies, and you fully understand this lesson all about access trading, from there, we're going to go into utilizing trading tools. And these trading tools are going to help you develop the habits that are key in order to progress. And we've spoken about those 5 progression truths a number of times. So that's where we're going with this course now. That's the next couple of lessons, and the next couple of hours of this course is to move you from trading strategies to eventually optimizing those trade strategies and your decision-making process with trading tools. All right, now, before we get stuck into this lesson 11, I think it's really important just to come back to the blackboard one more time, just to make sure that you really understood lesson 10. Because, like I said, particularly in part 3, we're going to start building now. So lesson 10 was important, and lesson 11 requires you to understand lesson 10. So we're going to build lesson by lesson by lesson. When we then get to the strategies, the 5 strategies section or lessons within this part 3, there you're going to have optimal opportunity to practice and keep just learning these methodologies, processes, and concepts that we're dealing with early in part 3. So what did we do in lesson 10 as a summary? Well, we introduced this thing called the playbook template. And I said to you, the first thing we want to do with this template is ultimately narrate. We want to narrate and storyboard our strategy, because from that we can extrapolate the truths, the underlying, undeniable, objective truths of our trade idea. From that, we go and create and find identifiers that logically show us the truths within our trade strategy. So if we have a momentum-based strategy, well, volume would be a logical identifier to use. So we find the various identifiers that underline our trade idea. And from that, we create a filter. Now remember what I said, a filter can be one single identifier or multiple identifiers combined together. The point is, the identifier is an objective thing. In other words, we can always lean on that identifier. And that's why we have to identify them. Now, with those identifiers, we go back onto our charts, we place these filters, and we can then begin the process of backtesting and developing our strategy through pattern recognition. Okay, it's the process of putting an identifier on a chart that allows us to begin to easily recognize the patterns. Now, whilst we're recognizing those patterns, we begin to formulate a trade strategy. So we can start to see, with this filter we've created that now minimizes our line of vision, in other words, allows us to see less observations from 100 to 6. So now, because we're only looking at 6 observations, we can start to formulate a trade strategy within those 6 observations. And from that, we find our entry and exit points, what our expectations, characteristics, and statistics are of this trade strategy, and what markets we can trade this trade strategy in. So that's where we got to in lesson 11. And obviously then we noted we have the notes section where we can include any variables, anything we think relevant to this trade strategy that we want to observe, that we want to be aware of, what might come the next day, anything with regards to this trade strategy that will add value and understanding to it. Now what we said was, this section on access methodology is what we are going to deal with in lesson 11. And that's where we've arrived to now. Is lesson 10 was about, the trade idea and the trade strategy and the notes section. Now we're going to move on to what access methodology is, why it's important, why you use it, the purpose of it, all these things. So that by the end of lesson 11, you'll be able to fully complete this template and start to see the power of it as we then move on into lessons 12 to 16, which are pure strategy focused. Okay, so that's where we're going. Is we're going to deal with obviously lesson 11, which is the access methodology, and we're going to take then 5 strategies. Each one of those strategies, we're going to develop the template first. We're going to then go and find the access opportunities of those strategies. And every single one of those strategies, I'm going to show you textbook examples, nuance examples, and even failed examples so that you can develop this template for yourself through the number of observations. So that's what comes now in lesson 12 to 16 is we're going to take this entire process we're developing from this playbook strategy template and get it to the point where you can actually begin executing these strategies. And then last but not least is ultimately moving on to part 4 of the course, where we now have an understanding, we have a strategic approach to the market, but now I'm going to provide you with a number of different tools that are going to aid your decision-making process. Things like risk management tools. Okay, so rather than you thinking about risk, you're going to have a very easy tool that's going to tell you what to risk based on predefined objectives. We're going to look at cue cards. Okay, so rather than you having to go and scrape through your notes to find out, where should I enter this trade? Where should I exit? We've got cue cards that you can very quickly get up so that, again, when you're in a trade, you don't have to think. Okay, so that's where we're going with part 4. All right, so now we're ready. I think you've got a good understanding of where we're going now and what's expected of you. So let's now move on to lesson 11. Okay, so what are you going to experience in lesson 11? We're gonna go through this in 3 parts. I've decided to do this a little bit slower in a sense that I want to break it up into 3 parts so that you really understand this concept of access methodology. All right, so what you're going to experience, access methodology. It doesn't exist. It's not something you've ever heard of, so don't worry. All right, it's a methodology that proprietary traders utilize. And hopefully by the end of part 1, you'll understand precisely why we utilize it, but more importantly, why it gives us an edge in the market. Now, you're going to experience how it works, why it works, and what is its intended purpose. The understanding that comes from this, how to perfect timing, of entering trade strategies, managing risk with a strategic approach, and learning to trade with the flows of the market. Consequences. Again, if you don't take this lesson, you're going to be suboptimal in your execution. That's the reality. Your execution methodology will be suboptimal. And you'll have a subjective risk management approach rather than a very objective approach, which I'll show you in a minute. However, if you take the lesson and you really spend time with it and you adopt it, it will unlock a unique methodology to, 1, control risk, and 2, remain wholly objective throughout the entire decision-making process. Right? That's the purpose of access methodology, and that's what you're going to gain from this lesson. Okay, so before we get going, it's really important to drive this idea home. And you probably heard Axia traders talk about this. You've heard, many of the Axia, guys that have developed courses talk about this, which is that just because you have a trade idea and a trade concept doesn't mean you've got a trade opportunity. So often, I see traders where they think they've got a trade strategy, therefore it means they've got a trade opportunity. Unfortunately, it's just not a long-term sustainable approach. The reality is you need a trade strategy plus an execution methodology, a strategic execution methodology, and then you've got a tradable opportunity. And you'll understand what I mean by this as we go through the next couple of slides. But what we're trying to conclude here is that without access to the trade idea, and this is how you'll remember it, okay? You have a trade strategy, but you need the market to give you access to that trade strategy. So without this access to the trade idea, all you have is a good idea, but you haven't got a repeatable edge. And that's what access methodology is all about. It's about giving you a repeatable edge, something you can repeat, something you can define, a rules-based process, and most importantly, something that's objective and repeatable over time. That's what we're trying to do with access methodology, is to take away that subjectiveness and keep you wholly objective throughout the entire process. So, in a nutshell, I'm going to explain this to you now with this graphic, and then I'll take you onto a chart. So it'll start to, formulate an idea of what's this new thing called access methodology really about. Okay, so we have three aspects of it. One, we have a trade idea, right? That's what you developed in your playbook strategy template, which is, I've got this idea, the market comes to this resistance point and it breaks out, and we have a breakout of resistance. So that's an idea, okay? We then formulate a strategy off of that, which is, when it gets beyond resistance, we want to be a buyer and we want to hold so long as it doesn't come back below that resistance. And we look for a specific target. So we start to define a strategy based on a number of observations we've viewed, right? And that's the second part of the template. That's the entry and the exit and the characteristics of the strategy. Okay, so straight away, you can see why this template's so important, because the first part allows us to develop this thing called the trade idea. The second part is where we start to develop the trade strategy. But now remember what I said, just because we have a trade idea and just because we have a trade strategy, it does not imply we have an opportunity. Why? Well, because we don't have a repeatable process in which to access this trade strategy. And that's what access methodology is. It's telling me, hey Brannigan, guess what? It's time to enter this trade strategy. And that's what access methodology is in a nutshell. It is the timing of entering that trade strategy. It's telling you it's now time to be involved with that trade strategy because it's now and only now applicable. That's what access methodology is. Now, before we go through that, I just want to take you, so these are the three sections. Like I said, we've got the trade idea with the filters. That's the first part. We then have the second part, which is the trade strategy. Entry, exit, our expectations, characteristics, statistics, and markets. That's part 2. That's the trade strategy. And part 3 is now the access methodology, which is what you're going to see on this chart. Okay, so again, you'll recognize this chart. You've seen this a few times now. This is that support level in that gold market we identified in the lesson where we spoke about drawing elementary support and resistance lines. It's also the same chart we used in lesson 10, okay? Now, the reason I use this example a number of times is because it starts to bring the whole understanding, the whole concept of what we're trying to achieve together. So, we have this idea, which is when the market breaks below support, we are looking for a continuation type opportunity. We've learned through a rules-based approach how to define this thing called support. So we have a rules-based approach for drawing these lines. We now have a strategic approach defined. We want to enter once we confirm a close below the support and ultimately stop out if it comes back inside that range. So that's our strategic approach. But remember what I said to you, the last piece of the puzzle that's missing is the access to the trade. Okay, and that's what this green line here is identifying. It's the candle that's telling us, hey Brannigan, it's time to get involved with this trade. Okay, it's just a candle that identifies the right kind of price action that we need to see to partake in our strategy. In other words, it's confirming, it's telling us, your strategy idea, Brannigan, it's the right idea because there is mass participation on that same idea. And that's why this methodology is so powerful, because it's confirming to us. Okay, it's not us enforcing our idea, which is it should break down and should continue and should do all these things. It's the market that's saying, hey Brannigan, your idea is actually right because we can see the following objective facts. And that's what the axis candle is. So that very candle there, it's a single candle, right? Axis candles are just a single candle or formation, as you'll see when we go through the different axis types. But in essence, that one candle is our axis. Now, I'm not going to get too stuck in it because you're going to get enough examples of this. But the basic methodology of axis trading. Once we have a confirmed close below the 24.7, which we do at that point, we would sell the open of the next candle. So we'd be short on that candle. Our stop would be simply above the axis candle, and we'd be looking for open-ended downside. Now, in a basic sense, we recognize this as an axis candle for 3 reasons. It has above average volume, it has a significant amount of delta, a high delta, as well as volatility. In other words, it meets the 3 rules of a high volume, high delta, volatility axis candle. Now don't worry, this sounds super complicated, but you will get the hang of this, trust me. Okay, so that is our axis, the market. We've got number 1, our trade idea. Number 2, our trade strategy, which is a breakout of support line. And with that, we've now got access to that trade strategy. The market says you may now enter this trade strategy once we get that axis candle. Okay, now hopefully you can already see why this is quite a powerful methodology. Right? Straight away, notice I didn't have to think where the stop is. I didn't have to think where the entry is. All I did was listened to the market, watched the data, in other words, listened to the objective thing in the market, which is price, and simply execute my strategy off of it. Right? And that's where the power in access methodology comes in. Now, yes, warranted, we got stopped out there and we lost money. Right? Not the best example to get you all excited about, but when we go through this, you'll start to see why this is so powerful. Okay? Hopefully you recognize that we have a limited amount of risk. In other words, risk is predefined, and that's important with access methodology. Our risk is always predefined. We don't think about risk management. It's predefined for us. More importantly, notice how much potential opportunity we have. Well, it's open-ended. Okay, and that's the power that lies within access trading. Now, we're going to go through 1 or 2 more slides, then I'm going to take a break. I'm going to give you a few minutes to really think about it, maybe watch some of this back, maybe even go on a chart and try and find, what I'm talking about. But this should come across quite clearly so you understand it. So these are kind of the rules, the principles of access methodology. Okay, and as you can see, this is what's going to go in this box of your template. So rule number 1, we look for access in conjunction with a strategic play. Okay, so it's not just a strategy on its own is an opportunity. It's strategy plus access together give us a strategic play. Now, access brings your trade strategy into play. And we've said this a number of times. No access, no play. In other words, if you do not have access, guess what? Your trade strategy hasn't been brought to life. And that's where the discipline of this will be taught, because you're going to be sucked and lured into taking your trade strategies. You're going to doubt your trade strategy. But the reality is, if you take on the access methodology, it will make you more objective for one, but also more consistent and ultimately more profitable over time. So no access, no play. It's not something that we question. If there's no access to the strategy, it didn't give us the entry point. Access at key trigger points. Okay, so ultimately, the reason why we look at this methodology is it's revealing to us where the mass participation is. Remember, access is all about going with the flow. In other words, you're going with the mass participation. Now, remember one of the deadly sins we spoke about where we go counter trend. Can you see how this very practical methodology ensures we're not going counter the trend because we're going with mass participation? Now, do note, when I say that, we're going with the flow, that doesn't mean we don't have counter-trend strategies. Of course we do. We've got a load of counter-trend strategies, and access methodology will allow you to access those trades as well. It just means you're not going counter to the flow of the market at that point in time. Okay, so it allows you to perfect the timing, and that's what makes it powerful. Now, note, you can use any time frame for access trading. I'm going to predominantly use the M15 because I incorporate that fully into my trading because I am a day trader. Okay. However, I utilize the daily access methodology for my swing trading. I use the M5 access candles for the fast money moves, the stop runs, those kind of plays. Right. So it all depends on the strategy you're taking. So it could be a 1 minute access, it could be a 15, it could be a 2 hour, 4 hour, daily, weekly. The point is the rules remain precisely the same and regardless of the time frame. So market is irrelevant, okay, and this is again what makes it so powerful. It doesn't matter what market we're trading in, right? Because, and you'll see when I get to the whole stock and flow discussion, it doesn't matter the market because stock and flow is stock and flow. In other words, if someone's buying the market, it doesn't matter what we call the market. What matters is they're buying it, and we can see what that method of buying looks like, and when we see it, we can participate with it. Okay? And that's what we're saying. Yeah, the application is dependent on stock and flow. Now, early access requires preempting. We're going to talk a lot about this. Sometimes you're going to need to access or preempt the access. And again, don't worry if this doesn't make sense. I'll show this to you in a minute. But the reality is the most important thing is to always, in the beginning particularly, allow for confirmed access. In other words, wait for a candle close to close. So if you're doing access candles on a 15-minute, wait for the close of that candle. If you're doing it on a daily, wait for the close of it. What I mean by preemptive is sometimes the rules that govern that access methodology. For example, if we are looking at a high volume, high volatility, high delta access methodology, that could be signaled before the candle actually closes. Right? In other words, the market could bring you into play before you have a confirmed close. Now, there are instances in which the risk reward makes sense to be preemptive in execution. But in the beginning, keep it simple. Stick to the confirmed closes. Why? Because you're trying to learn the power of this process. You're trying to get the hang of it, understand when to use it, why to use it, how to use it. Don't complicate it until you've got a couple of months utilizing this methodology. Now, access gives you defined risk, an open-ended reward, as I showed you. Stops are predefined. Okay, we don't have to think about them. We place the stop at the point where the access candle is invalidated, and it's invalidated at its opposite extreme. In other words, if we see a bullish engulfing just before a trade strategy is about to take place, we access that trade and we simply place the stop at the base of that bullish engulfing. In other words, where that access candle, that specific access candle, is invalidated. Can you see how simple that is in terms of a rules-based approach? And lastly, price closes are vital. Why? And I've said this a number of times. Wait for the confirmed close of a candle before deeming it as access. And the reason is because it reveals the commitment. Okay? It tells us everything we need to know about participants' commitment for that trade strategy. Now, we're going to do 2 more slides and then I'm going to give you some time to go think about this. Stock and flow, right? The basic concept of stock and flow has to do with supply and demand and equilibrium. In a basic nutshell, more often than not, the markets are sitting around this equilibrium point. So think of equilibrium as a fair value of price. Doesn't matter what the market is. Now, often what happens is news flow or narratives or some form of a catalyst comes into the market, and that creates a disequilibrium. In other words, maybe there's an oversupply of stock or there's an undersupply of stock. In other words, there's too many people wanting to sell or too many people wanting to buy. And that then brings participation into the market. Now, there's varying degrees of time frame participant, and that's why I said to you, this works across any kind of time frame because participation is participation. It just looks different on different charts. So, the important thing to understand with stock and flow is that when there is a lack of available supply, prices will go up until such a point that someone is providing that liquidity. And equally, when there's an oversupply, prices will keep going down until the market finds a willing buyer or buying liquidity. Right? That's the reality of how markets move. They move with this idea of momentum until they can find the next point of fair value. Right? Now, it's important to understand that because ultimately, as traders, we have to know that, and this should have been in one of the truths of trading, but the reality is markets go up and down. That's all they do. We spoke about that. It's completely binary. It's one of the unwritten truths of the markets. They only go up and down. But what makes them go up and down? Well, it's simply just mass participation and agreement ultimately, as well as commitment. In other words, there's a commitment to demand the available supply, or there's a commitment to sell into the available demand. Right? That is what makes the markets move up and down. And that's why we lean on the access trading, because it tells us when there is a shortage of the available stock and when there is an oversupply of the available stock. Right? That's why we lean on it, because we don't want to go counter the stock and flow idea. Right? Because all we're doing then is going against mass participation. So, this is what we're going to do now. We're going to just briefly introduce the 5 types of access, and then we're going to finish off with. I just want to check. Okay, so we're going to go through the 5 types of access, and then I'll give you the reasons why we utilize access one more time, the objectives of it, and then you're going to take a break. So, 5 types, and don't worry, I'll go through these over the next couple of slides when we come back for part 2. 1, engulfing candles. You all know what that is. 2, high volume, high delta and volatility candles. I'll show you what these look like in a moment. 3, high volume, long-tailed reversals. 4, high volume, equal and opposite candles. And 5, consolidation access. Okay, also known as usually seen as economic data access. Now note, I'm going to teach you 5 variations of this price action. Okay, that's all access methodology is. It's a type of price action, except we attach very specific rules-based approach identifiers to it. In other words, it's not just an engulfing candle. It's an engulfing candle that has specific identifiers that makes it an access candle. Right? It's not just long-tailed reversals. It's long-tailed reversal candles with a high amount of volume, because we need the volume to confirm the mass participation. Right? Don't forget that. That's crucial to understanding why this methodology works. However, I'm going to show you 5 variations. I'm going to show you these variations because they are the most common. They're the ones that I've seen over the last couple of years. Now, it's not to say there aren't other access types. There are, and that's, if you really understand the access methodology by the end of lesson 11, hopefully you get to that point where you're thinking, actually, I have maybe a 6th or a 7th idea for access methodology, something that I too recognize that's got very objective identifiers, right? Make sure that you can do these 5 types of access methodology, and in time, in a couple of months and a couple of years, you can then add on your own types of methodology, which you will extract by going through this constant process of taking your templates, developing your strategies, and keep going through that feedback loop we spoke about in part 1 and 2. Now, the last part we want to get to, and again, I'm just showing you this example. This was the access candle. and this would be called just simply a high volume, high delta, volatility access candle. Okay, so that's one of the types, and probably the most common type of access candle you will see for breakout strategies. Okay, now what we're going to deal with, and that's why we included it in the template, was various strategies have a tendency to lean towards specific types of access. In other words, in some strategies, you're going to see a great deal more access candles of a specific type. Now with breakout trades, this is the most typical type of access you will see. But again, we'll get to that when we get to the strategy section in lessons 12 to 16. So to summarize, and this is important, this is probably the most important part of this part 1. Why do we use access methodology? Number 1, it's a discretionary methodology that solves the biggest mistakes 95% of traders fail on. In other words, discretionary traders have got too much discretion, too much subjectivity in their approach. And this will solve 95% of those discretionary problems you've got. Number 2, it's a risk management solution. Why? Because we have a precise stop with limited downside. In other words, we're focusing on one of the biggest problems most traders have, which is managing our risk. Number 3, precision timing. Right? In other words, we're not early on our opportunities. We're not preempting on our opportunities. Remember how we spoke about preempting. Right? Preempting is in a very, very difficult game, and very rarely does it give us the kind of value we would like to see. Number 4. Passive or aggressive order entry. So often traders are confused. Should I be aggressive? Yeah. Should I buy the breakout? Should I, if I buy it, yeah, where do I start? Okay. This completely eliminates the idea of do I need to be passive or aggressive? Because the access type candle will tell you if you need to be aggressive or passive. Okay. If it's a breakout type trade, all right, the access candle is going to force you to be aggressive. Why? Because that's the nature of the stock and flow in the market. If it's one of the other types of access candles, it's probably going to allow you to be more passive in your entry. Right? So the access candle will reveal to you whether or not you need to be passive or be aggressive. Number 5, momentum with the big time frame participants. In other words, you're never fading the flows. And that's crucially important. Right? Number 6, it's 100% objective methodology. Why? Because we use specific identifiers when outlining access methodology candles. Right? You're going to see through each one of the 5 candles, I will highlight those identifiers that you need to see for it to be an access candle. More importantly, you're going to get a lot of practice. Number 7, leverage utilized effectively. And ultimately, we're going to learn to adopt the skill of using leverage. Why? Because I'm going to show you a number of textbook examples, and what you'll see through utilizing that strategy playbook template over time, seeing the same strategy time and time again, you're going to learn to differentiate between what's the textbook example of my strategy, i.e. the perfect, so easy, can't believe I didn't use more size example. You're going to see the nuance examples, and you're going to see the failing examples. Now, where the power of leverage comes in is once you've seen enough of the textbook examples, you will know when to utilize that leverage. In other words, access methodology is going to teach you to use leverage as a weapon. Okay? Not just in any instance, but as a weapon, as a value add. And more importantly, you're going to use it effectively because access trading also teaches you when and how to stay in a trade. Number 8. Simple approach to trade execution. And that's probably one of the biggest mistakes and problems most traders have, including myself very often early in my career, right? Is we overcomplicate things. Oh, which price should I get in? Oh, maybe I put the stop here, maybe I put the... No, none of that needs to be, none of that needs to happen anymore because the access candle tells you when to get in. It also tells you when to stop out. Right, so it tells you everything you need to know so that you can focus on the objective information coming in from the market. So ultimately it solves the problems of 95% of failing traders. Now, I know I use this term a lot, and it's not like I want to think as 95% of traders fail. It's more to highlight that 95% of traders have all got common problems. And we dealt with those problems in part one. We dealt with the issues that most traders tend to experience. So all we're trying to do is make you recognize that we can solve those problems through Access methodology. Okay, let's take a break. Have a think about what we've just spoken about. When we come back, we'll move on to part two of Access trading methodology.